Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Friday, 28 November, London Open Prep. Here are the key themes shaping the day. Japan's inflation pulse firms, yet the yen stays soft, while gold tests a technical breakout into thin holiday liquidity. And in Europe, eyes turn to German inflation prints and a renewed push on critical minerals and transport corridors that speak to longer-term supply security. Starting in Asia, Tokyo consumer prices ran a touch hotter than expected, reinforcing the case that the Bank of Japan edges closer to further tightening. Even so, the yen hasn't drawn firm bids, and dollar-yen is buoyed by a steadier U.S. dollar. Japan's activity data were mixed, with factory output surprising on the upside in October, but manufacturers guiding for declines ahead, and equities across the region traded mixed as the U.S. holiday kept ranges tight. Australia stood out, with the Aussie dollar firmer after hotter inflation extended the run of gains and nudged markets toward a more hawkish Reserve Bank stance. In Europe, Germany's state inflation readings later this morning lead into preliminary national figures, with headline price growth seen only slightly above last month. Sticky core pressures have kept the European Central Bank cautious, and the euro is holding just below recent highs against the dollar. Policy and geopolitics remain in focus too, with Brussels urging G7 partners to accelerate a large loan package for Ukraine, and the European Union still backing the Trans-Caspian route to diversify trade even as financing realities bite. Commodities are lively. Gold is probing a break of a multi-week consolidation, hovering near a 2-week high, but still below the widely watched 4,200 level. Traders note holiday-thinned liquidity and month-end flows could blur the signal, while silver has stalled near a familiar supply zone. In India, local gold prices are firmer. And on the strategic raw materials front, Europe is pressing ahead with rare earths projects at home, as supply chains rewire, while Beijing has asked Malaysia to explain a rare earths-linked deal with the U.S., a reminder that critical minerals sit squarely in the geopolitical crosshairs. One operational wrinkle. A technical issue has halted trading on CME Globex for futures and options, limiting early U.S. price discovery. That, plus yesterday's Thanksgiving closure, may keep liquidity patchy into the European morning. Meanwhile, South Korea announced sanctions tied to regional scam prods, underscoring a broader clampdown on transnational financial crime, though with limited immediate market read-through. Turning to market and sector focus, a cautiously constructive risk tone, alongside lingering U.S. rate cut bets, supports equities on balance, while a steadier dollar keeps major pairs contained. That backdrop is modestly supportive for gold, but caps a runaway move until liquidity normalizes. The euro is sensitive to today's German data, and the Aussie remains bid on shifting central bank expectations. Looking ahead, Germany's state inflation prints land through the morning London time, with the national preliminary figure due early afternoon. Beyond that, the calendar is light, and month-end flows could dominate. Keep an eye on when CME futures markets fully resume, as that will reset global cues. What I'll be watching today: the Australian dollar against the US dollar, looking for an uptrend to extend if RBA pricing keeps firming. Dollar-yen for a grind higher, but sensitive to any follow-through in Japanese yields after the firmer Tokyo inflation. Euro-dollar around the German inflation releases, where a sticky print could check recent euro gains. And in commodities, gold for a decisive close above 4,200 to confirm the breakout, while silver's hesitation near resistance leaves room for a pullback if momentum fades. The takeaway: markets are edging risk on but remain liquidity thin and data dependent, with Europe's inflation and month-end flows likely to set the tone into the close. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.